Welcome to the Lend Academy podcast, session number 21. This is your host, Peter Renton, founder of Lend Academy. So today we have someone quite a bit different on the show. You know, I've been writing about peer-to-peer lending now for almost 4 years, and I do enjoy the writing piece and the research, but I've never considered myself to be a professional journalist. I don't do deep investigative reporting or anything like that. You know, I'm much more of a cheerleader for the industry, an educator, and someone who really shares their own personal experiences. So anyway, what I thought I'd do today is get somebody who is a professional journalist on the show, someone who's been following the industry professionally for some time. So I'm pleased to welcome Tracy Alloway. She is the US financial correspondent for the Financial Times, which is a London-based publication, but has very much a global reach. And if you've been following this industry closely, you will have read several articles that Tracy has done about this industry. She's broken several stories, relating to Lending Club, SoFi, and others. So I really was thrilled to get her on the show to really talk about her perspective, how she does what she does, and some of the interesting articles that she's written recently. Hope you enjoy the show. Welcome to the podcast, Tracy.
Thanks very much. Glad to be here.
Okay, so why don't you give the listeners a bit of background about yourself? I mean, a lot of people probably don't know who you are. So just tell the readers just a bit of background.
Sure. So I'm the U.S. financial correspondent for the Financial Times, currently based in New York, but I spent a lot of time in London for the past decade, and I actually grew up in Tokyo. Always wanted to be a journalist, and now I'm doing it.
All right. So then when did you start to cover peer-to-peer lending as a journalist?
Sure. So I actually moved to New York about 2 years ago to cover the big U.S. banks. And believe it or not, they were my entry point for the peer-to-peer industry. I was covering Morgan Stanley at the time when John Mack announced that he was joining the board of Lending Club. Mm-hmm. Of course, I had heard about peer-to-peer lending before that, but the fact that John Mack was joining this quite fast-growing company piqued my interest, and I decided I would take a deeper dive into the sector after that. Okay, so
obviously, the Financial Times have been covering the UK peer-to-peer lending scene for a long time, so I presume, did you come across peer-to-peer lending when you were in the UK?
I did a little bit. When I was in the UK, I covered capital markets for the paper, and before that, I was on FT Alphaville, which was our finance and markets blog. And Alphaville has a reputation for being very avant-garde and discussing new and interesting ideas in the financial sector. So I think I'd probably written about it while I was on Alphaville, sort of on the fringes when we were talking about possible technology disruptors. But the first time I really got into it was definitely when I moved to New York, and I just found the U.S. side of it very, very interesting. And of course, the U.S. peer-to-peer lenders are the largest in the world. So. Mm-hmm.
Sure. So what is it about the peer-to-peer lenders here that you find interesting?
Well, I just find the story very interesting. It's something that happened after the financial crisis. Originally, it was about people sort of clubbing together to make loans to each other in a more efficient way. It was about using new technology to do it in a more efficient way. It just tapped all these really, really relevant post-financial crisis themes. And I think, as the years have gone by, it's just become more interesting, especially now that you have the banks themselves and Wall Street traders and investors and bankers getting more involved in this space. It's just the story that kind of keeps on giving.
Mm-hmm. Yep. And it seems like it's only getting more so. So one thing, when I was, before I decided to interview you, I looked at ft.com, which is your website, your Financial Times website, and I would imagine you would say your equivalent or your big competition in this country is the Wall Street Journal, also obviously the leading financial publication here. When I looked, you search the term Lending Club on both those two sites, you get roughly the same number of relevant articles, which I was really surprised because The FT is an English publication and obviously focusing more on that country than any other, I imagine. So why do you think the FT has taken such an interest in peer-to-peer lending and particularly in Lending Club?
Well, I like to think that the FT punches above its weight on a lot of financial topics. We are a British-based newspaper, but I think we're unique in having a global outlook. So if we're covering the peer-to-peer industry, you can rest assured that we're going to be covering the peer-to-peer industry outside of the UK as well. So the US obviously has some of the largest peer-to-peer lenders, and amongst those is Lending Club. Mm-hmm. Naturally, we gravitate a lot towards Lending Club. We also cover peer-to-peer on mainland Europe. We also cover peer-to-peer in China, which is an entirely different sector to what it is in the UK and the US. Mm-hmm. So I think what makes the FT's coverage a bit unusual is we're able to draw those sort of cross-border comparisons of the industry.
Right. Yeah, that makes sense. So you cover the big banks still, and obviously you're writing about far more than just peer-to-peer lending. So, but you're talking to these executives at the big banks on a regular basis, I imagine. Does the topic of peer-to-peer lending come up? And if so, what is their opinion?
Yeah, it's a tough one. To be honest, I don't think it's entirely on their radar yet, or if it is, it's certainly not big enough for them to sort of have come up with a public response to it yet. One of my favorite stories that we've done involving peer-to-peer was actually about the memo that Wells Fargo circulated,
right.
where they banned their employees from investing in peer-to-peer loans, citing conflicts of interest. That one was kind of unusual, and of course, it was a private memo. It all happened behind the scenes. If you ask a major CEO at a very large bank what they think of peer-to-peer lending, I don't think they've really got their head around it just yet, and I don't think they would give a very good answer about what they're doing in response to it, or what they think it is, or what possible competitive threat it might eventually pose to them.
Interesting. I know on that. Well, that Wells Fargo article, you actually caused them to change tack on that. Yeah. They've since rescinded that ban, which is good news, I think, for everybody. So Wells Fargo are obviously well aware of it, and you've got the people like Morgan Stanley are well aware of it. But what you say is that it's still so small, and it is really small. The reality is that these banks are some of the largest companies in this country, and they, so you're saying it's just, they're not concerned at all right now.
Well, I think what I'm saying is if they are concerned, they're certainly not sharing those concerns publicly. Banks and peer-to-peer lending is a bit of a nuanced story, because I think the retail sort of consumer-focused banks don't know quite what to make of it just yet. Certainly the larger ones don't. Some of the more Wall Street, trading and investment-oriented banks are very interested in the sector. They see the opportunity to securitize peer-to-peer loans. They see the opportunity to get IPO fees. They see all sorts of capital markets potential from the sector. No one's really digesting, or at least no one publicly appears to be digesting, the competitive threat posed by peer-to-peer lenders just on the consumer lending.
Right. Yeah, that makes sense. To me. I haven't seen much that would indicate anything different there. So I want to switch gears and just talk about Camp Alphaville, which I know you went back to London for, and you had some quite esteemed people on a panel about peer-to-peer lending. I know you had Renaud Laplante, the CEO of Lending Club, who was just on the previous show here on the Lend Academy podcast. I believe, was it Cormac Leach as well from Liberum was on there? Can you just tell us a bit about that panel? I've read virtually nothing about it, so I'd love to get some insights.
Sure. Well, I can point you in the right direction to read something about it. But in the meantime, I mentioned Alphaville before. Alphaville is really our cutting-edge finance and markets blog. It's where we discuss a lot of up-and-coming ideas in the financial space. And Alphaville had the brilliant idea to hold a very unusual conference in London to discuss some really interesting concepts. One of those concepts that we wanted to discuss was disruptive technology and banking. So obviously we had to get some of the peer-to-peer guys in. We also had some people that were looking to do interesting things in terms of disruptive technology on the more investment banking side. But I think what we found through the conversation was that everyone kind of agrees that platform-based technology has the potential to pose a competitive threat to the banks. I guess the big question now is, as we alluded to earlier, the bank's response to that. Do they go head-to-head with it, or do they maybe co-opt some of the technology themselves and start working a bit more with the peer-to-peer lenders as well? And, we've seen a little bit of that on the edges with some of the announcements from Lending Club.
Right. Okay. I would like to obviously get a link to any story, and I'll put those in the show notes on lendacademy.com with this podcast, so people can read more about it. That would be great. I wanted to talk about the story that you broke just a short time ago. I think it was a bit over a month ago, about the Lending Club, what the expected valuation is, who the underwriters are going to be. I know you won't give away your sources for that story, but how are you able to get such information and be able to share it publicly? And also, was Lending Club a little frustrated with you about that? Because, there was no press release going out.
Yeah, well, that was kind of a funny story because, of course, we broke that news the week before, I think the Friday before Camp Alphaville was held. And we were having
nice timing, right?
Yeah, and so we had a few people, some conspiracy-minded people, who said that we had clearly been in collusion with Lending Club about doing that announcement and generating publicity for Alphaville ahead of it. I assure you that was not the case. Everyone has known for a long time that the Lending Club IPO is coming. Mm-hmm. We've been working on that story for a very, very long time. Obviously, I can't give away any sources, but we are deeply sourced both within the peer-to-peer industry and on Wall Street.
Right. Okay. So obviously, Renault wasn't so annoyed with you that he cancelled his appearance on Camp Alphaville, but
yeah.
I meant, like you said, they had no comment on the story. So is that what you expected? Were you hoping to get a bit more meat from them, or how was that story going to play out? Did you expect?
Well, look, it's always great when the company comments publicly on a story, but we have to, deal with what we're given, and we're confident in our sources and we're competent in that story. So we'll see when the IPO comes about.
Yep. Okay. Well, I'm going to ask you a question about that in a little bit, but
sure.
First, I want to talk about SoFi because you also broke this story before anybody else, I believe, that the SoFi securitization was their second securitization, was covered pretty extensively, and this was the first one though that was rated by S&P, one of the major rating agencies. The other one, the first one was rated by, I think it was rated by DBRS. But so first, my question is, what is the significance of SoFi getting a rating from S&P, and is it that much a bigger deal than getting it from DBRS?
Yeah, this is an important story as well, as you point out. I think it's fair to say that getting a rating from S&P is possibly more important than from DBRS. The fact is that there are a lot of very large money managers and insurers and pension funds who can only buy securities that have been rated by one of the top three credit rating agencies. S&P is one of those. DBRS is not yet.
Right.
So the fact that they got this designation from S&P really opens up a whole new range of investors who can buy peer-to-peer loans. The other thing it does, I guess some people would argue, is that it legitimizes the sector a little bit. The unusual thing about the S&P rating was that I think about 2 or 3 weeks before, S&P had published a research piece in which they said it was too early to start evaluating peer-to-peer securitization.
Mm-hmm.
So when this story came out, a lot of people were really surprised. And one of the major questions I had was how S&P had been able to, I guess, overcome its discomfort in rating peer-to-peer loans. I guess the fact that SoFi specializes in student loans helped a little bit. Student loans are generally considered safer than consumer loans. However, I've also heard that the methodology that S&P used for rating the bond can also be extrapolated to consumer loans. So quite a few people think this also opens up the door for consumer loan-based securitizations of peer-to-peer loans. So we'll see what happens. Rating agencies are always sort of an interesting story, and it's always extra interesting when they're evaluating new types of securities.
Right. Because, the thing about the SoFi securitization, these are really, super prime borrowers in a lot of ways. There was a story just today, CNN Money had a story about the SoFi. It was like Wall Street funding rich kids of their student loans. So it's really the creme de la creme of the student loan population. So would you, I guess you could possibly extrapolate it out to maybe, with Lending Club, which, Lending Club, there's been securitizations. Eaglewood has done one, as I'm sure you know. But you're thinking that S&P, maybe if they took a tranche of Lending Club, maybe like an A and B rated tranche, do you think that's something that might make it into an S&P rated, securitization?
I think there's a lot of pressure on the rating agencies to look at consumer loan peer-to-peer securitizations. We'll have to see what happens and whether they think they can encompass some, previously unknown risks involved in these securitizations. No one really knows how these loans are going to react in a cycle where interest rates are going up. And generally, rating agencies are very wary of evaluating those sort of unknown situations. But I can tell you the big story to get is when S&P or Moody's or Fitch decide to give a rating to a Lending Club securitization or a Prosper securitization for that matter.
Right. So have you heard anything on that note?
I have not, but you can rest assured when I do, I'll be writing a story about it.
Right. We won't have to wait long after you've heard it, I imagine. Yes. Okay. And that would be interesting. I think, Lending Club is going to be, in the news a lot, I imagine, here pretty soon at some point anyway with their IPO. Now, I had, as I said, I had Renault on last time, and, I didn't even ask him when he thought the Lending Club IPO was going to happen because I knew he wouldn't tell me. But I'm just curious about your thoughts. You've been covering this company pretty closely now, and you broke the story about their underwriters and the expected valuation. So what are your thoughts on Lending Club's IPO? Is it imminent? Is it happening third quarter, fourth quarter, September? What are your thoughts?
Well, I think when we wrote the story last month, I think we said the third quarter of the year or thereabouts. Obviously, there are a lot of moving parts. No one wants to IPO in extremely volatile markets, and you never know after August, or during August, stuff tends to get weird sometimes. Mm-hmm. The other thing that's happening is you have quite a busy IPO market at the moment, which could be a good thing for Lending Club. Lots of investor interest in tech-based IPOs. For instance, we have Alibaba coming up, which is one of the biggest IPOs ever. At the same time, though, if there's a lot of interest in other IPOs, Lending Club does risk a bit of investor saturation, I guess. Maybe people get a little bit weary of them. So, the timing could move around quite a bit, but I would guess third quarter, maybe fourth quarter of the year.
Right. And they could also do, because Lending Club are a pretty small company, and with I think there was, was it Twitter or one of the companies did where you just have you can just do a 2-week lead time in your IPO. You can get all your ducks in a row, and it's called, it's like a private IPO. I don't know. I can't remember all the details. But,
confidential filing?
Yeah. I think there is because I think it was a Jobs Act thing or something recent where you can do an IPO if you're a smaller company, and Lending Club would fit into that category of being I think it was less than $1 billion in sales or something like that.
That's right. So under the Jobs Act, you can file confidentially for an IPO if you're I think it's called an emerging growth company or some acronym like that. Mm-hmm. However, I've been told by a few people that might not be possible for a Lending Club because of the way they sort of originate and distribute loans. They file everything as securities through the U.S. Securities and Exchange Commission. Yep. So I think for some reason when they IPO, they actually have to go through a public process. They can't do it confidentially because of the way they do their securities.
Okay, I hadn't heard that. That could be quite likely very true. So then, what about you reported about a $5 billion valuation? I mean, do you think that's reasonable? I guess. Do you think that's something that they'll go higher on? What are the valuation is something that tends to get some press, and with when you do comparables, particularly if you compare them to any kind of financial services firm, that's it's astronomical, their valuation. If you compare with some of the tech companies that aren't making money, then it's not that extreme. But what do you think of their valuation?
$5 billion seems a little lofty to me, but as you say, there is a lot of interest in technology at the moment. There's certainly a lot of interest in financial technology. There's still a lot of money floating around the financial system, and it needs to go somewhere. So I could see a lot of people, finding Lending Club a compelling story at the moment.
Mm-hmm. Yeah, well.
And also, $5 billion, $5 billion isn't that far from the last sort of valuation that we heard of, which I think was $3.8 billion.
Yep, that's right. I think it was April. So, yeah, I mean, particularly the longer they go, and their valuation has been roughly tracking their total origination number. I mean, not exactly, but they've just gone over $5 billion in total originations. So, yeah, I wouldn't be surprised. I hope it's a successful IPO, and that will be, it'll be fascinating to see how it all plays out. So let's just talk about Prosper. What have you been hearing about Prosper? Do you think they're going to follow Lending Club's footsteps? What have you been hearing?
Yeah, Prosper is kind of an interesting story at the moment. They were in a bit of trouble, I think, less than 2 years ago, and then they hired a bunch of new executives, raised a bunch of new money, got kind of back on track, and they've been growing, I think, at roughly the same pace as Lending Club.
It's actually much faster than Lending Club.
There you go.
But anyway, go on.
Growing faster, but from a smaller base.
Sure, exactly.
I don't necessarily think that they want to IPO the company. I think they're going to wait and watch and see what happens with Lending Club's IPO. But even if Lending Club's IPO goes very well, which I think everyone in the industry wants it to, mm-hmm. I don't really think Prosper is in the market. I don't think they have the same strategy. I think maybe, they'd be looking for a different kind of future.
Right. Okay, and so what about Funding Circle? I mean, they're obviously a UK company, the biggest in the business lending space. I mean, do you follow Funding Circle being an FT correspondent, or is this something that you leave to others?
Sure. I generally leave it to others. I've met the guys from Funding Circle a couple times when they were visiting in the US, but I don't follow them very closely, and I'm not as deeply sourced when it comes to Funding Circle. I generally leave that to my esteemed London-based colleagues.
Right. And Funding Circle certainly get a lot of press from your London colleagues there. So what about other companies? Are you following any other, either some of the more established or some of the new players, or is it anyone else on your radar that you're watching closely?
Yeah, there are one or two. I'm afraid I can't really tell you because I do want to do stories on them.
Okay.
And I'd rather not tell all my competitors what I'm looking at.
Right.
But there are some interesting players. The difficulty in the space now, I think, is how up-and-comers kind of differentiate themselves from more established firms, and also from firms that are just kind of jumping on the bandwagon and don't necessarily have a interesting or decent strategy. Peer-to-peer lending obviously has become a hot topic, and I think quite a few people are piling in. We get a lot of pitches from peer-to-peer lenders, and sometimes it's tough to differentiate between people who have compelling stories and people who are just kind of in it because it's a hot topic at the moment. But I think I've found one or two newcomers who will be interesting in the future, and I look forward to writing about them. Okay,
sure. Because you probably get pitched way more than I do, and I get pitched 2 or 3 times a week from new startups or someone that's peripherally, like the real estate crowdfunding space is just so incredibly hot. It seems to be a new one coming every week, and most of them sort of make their way to my desk as well. So, and actually on that point,
you probably have the same problems, right?
Right. And and I cover the ones that I think are interesting, and the ones that are, some of them are just, this guy's got an idea and he wanted to run it by me before he does any major work on it. So that they range from that all the way through to we've raised $1 million in seed capital and we're serious. And those are the ones that I'm more likely to actually write about myself. So on real estate, real quick, do you follow that space at all, or is that really out of your area?
I used to follow a bit of the crowdfunding story back when the Jobs Act first came out. We found that kind of interesting. Also, from a bank angle, we were interested in how the large banks were reacting to the Jobs Act. I don't follow it that closely anymore. I probably should, but we cover a lot of the crowdfunding space out of our San Francisco office. Right.
Fair enough. Yep. So before you go, I wanted to get some final thoughts on your overall industry. Obviously, you've been following it for a little while. You've probably seen the spiels from all the companies, and the white paper that Charles Moldau from Foundation Capital put out that predicts $1 trillion globally in this industry by 2025. So do you think that those numbers are being optimistic? Are they even pessimistic? I mean, do you think where do you see this going? I mean, you're covering the big banks, you're covering this industry broadly. So where do you see the peer-to-peer lending little subset of this industry going, and how big can it get?
Yeah, it's kind of a difficult one. I think it's hard to say whether that 1 trillion projection is optimistic or pessimistic, because I think what's happening and what will happen as we continue is that the peer-to-peer industry will become more entwined with the banking system and Wall Street. And I think there will be companies that do sort of pure peer-to-peer lending where they connect, individuals directly to other individuals, or where they connect investors directly to individuals who want loans. But I think what we might also see are some big banks who kind of adopt peer-to-peer underwriting technology to more efficiently originate their own loans. So I think the space it'll become kind of muddled in the future. So it's difficult to make a hardline projection for peer-to-peer loans.
Right, that makes sense. I mean, that's really what's happening right now. I mean, with Lending Club and all their banking deals, the Union Bank deal, and there's lots of smaller banks on their platform. So that makes sense. So you're going to continue to cover this industry closely, I presume, over the coming months and years, shall we say?
Yeah, I'm hoping to, for sure. Like I said, I think it's a story that keeps on giving, so hopefully it'll give me a few more interesting scoops in the future as well.
Right. Well, I certainly look forward to reading those, Tracy. So thank you very much for your time today.
Thanks so much, Peter.
Okay, bye. Okay, there you have it. So I encourage you all to read Tracy's work that she has done. I'll be linking to several pieces that she's written recently in the blog post accompanying this podcast on lendacademy.com. The thing about the Financial Times, it is you do need a login to read the articles, but they do provide a free registration. You get up to 8 articles a month, which should be enough for the casual reader, and that should be able to get you all of Tracy's recent writings. So really encourage you to sign up there. The Financial Times do a great job covering this industry and have been a great source of knowledge for me, and I know for many others. So on that note, I will sign off and catch you next time. Thanks for listening. Bye.